Hello, everybody. Due to popular demand by both Patreon and you guys out there in the YouTube land, you're very interested in Chainlink. And there's been a lot of good press about Chainlink as well of late. So we are going to dive in. And I can promise you a very interesting dive. So there's three things that I know very well. I know technology, I know finance, and I know valuations. And what I do is I put all three together to estimate if an asset is worthwhile buying or not. That's the mission behind this video. And we look at data that I promise you, even if you are a Link Marine, you've never seen it before. That's what we do here. So let's go. And of course, this is not financial advice. This is edutainment, as you know. And again, if you're interested in expanding your mind, subscribe to the channel. Thank you all for coming. So for those of you who do not know, Jeff Hammer, buddy, how are you? Who do not know our token valuation process, we break everything down into 10 different points. We're going to go through what it does, how it ranks, how it's disrupting an industry, value propositions, technology and developers, tokenomics, spend a lot of time on tokenomics today, ecosystem, growth and longevity, risks, very important risks, and price predictions. I will not give my typical price predictions, but I will share that from 6 different analysts towards the end as well, and then overall conclusion. So let's go. First of all, background from Chainlink, founder from Sergey Nazarov, early pioneer in smart contracts, super smart guy. And the token launched in 2017, mainnet 2019. And the vision is to empower smart contracts and tie in real world data to the whole process. That's kind of what an oracle is, kind of branching smart contracts in the blockchain world to the real world. And they've made some great strides in that area. So what do they do? Breaking it down, it's a decentralized Oracle network that, again, helps smart contracts access, I forgot I've mentioned that already, real-world data and events, for example, for insurance and gaming and other things. It also can interact with both on-chain and off-chain data, i.e. on-chain world and off-chain real world. Interesting, that word off-chain. Also, it can support Web3. And Eric Schmidt, who we'll talk about actually later as well, the former CEO of Google, is a very big believer in Web3. But Web3 seems to have gone by the wayside a little bit. But anyway, moving on. What it does, basically, it can do kind of any API and any payments anywhere. You've heard a lot of talk about Swift and Visa and MasterCard and PayPal and working with Solana and Phantom and Avalanche and Ethereum, etc., all over the place and how they do that. But basically, the idea is, again, to connect the real world to, and especially the payments world, like Swift, and their partnership with Swift is for that, to the actual blockchain world, because everything in the future is moving towards the blockchain and everything will be tokenized. No ifs, ands, or buts. And that is why this one is actually very important. So how does it play? Well, they want to be the most reliable, most widely adopted Oracle service, and they are today. Also, they process data requests from smart contracts, tie them into the offline world, ensure accuracy and reliability so no funny games are played. It's think of this as the policeman that manages the blockchain world with the kind of offline world as well. And everything that they build is a function of reputation and trust. And that is also critical to all things Oracle. So let's look at the scorecard ranking and competition first. These are the players. So in our crypto compendium, we have a category called data management. It includes names like Chainlink, The Graph, Mask Protocol, Ocean, Band, Flux, Origin Trail, Orchid. Many of these names you probably know if you're in the space. And what's interesting is there are a lot of them. And many do different things. For example, we put World Mobile Token into this category. It's not an Oracle per se, but it is a data management play as well. And of all these players, Chainlink ranks number 1. The market cap rank is number 19 from the crypto market cap. So that's kind of where we are now. And when I first did this, which was nearly 2.5 years ago, the first analysis, Chainlink was 13.4 times larger than the next biggest Oracle. Now it's only data management play. Now it's only 5.2 times larger than the next biggest play. So the competition, we'll talk more about those too as well in a minute. So target industries, where do they play most? And what I like about this too is they have an extreme breadth of industries. For example, finance. Chainlink is used to develop financial applications like DEXs, lending platforms, insurance protocols. They've been working with Aave for a very long time. Supply chain management. Chainlink can be used to track the movement of goods through supply chains, ensuring transparency and efficiency. Also, gaming. I mentioned yesterday in Okta, they partnered with WeGame, a big Korean gaming site as well, that wants to do cross-blockchain connectivity and use Chainlink as the oracle. Also, insurance. Chainlink can be used to develop parametric insurance products that can trigger payouts automatically based on real-world data. And of course, IoT, Internet of Things. It can be used to connect smart devices to smart contracts. Think of that. Wow. Amazing. Let's talk about value propositions. They are decentralized. It is not controlled by any single entity, which makes it more resistant to manipulation and fraud. Security. Chainlink uses a variety of security mechanisms that ensure that it provides smart contracts data that is both accurate and reliable. Also very flexible. As I mentioned, it works across gaming and IoT, supply chain, etc. And that is quite powerful. Also scalability. It's designed to be scalable so it can support even the largest, most complex applications. For example, gaming, you need to scale. If you work with Swift, you need to scale. So let's look at developers. I always say follow the developers, follow the money. Two most important things. Let's look at the number of developers that Chainlink have compared to all other chains. This is the top ranking of developers. You can see Chainlink actually have less developers than EOS, and I thought EOS was dead. That's kind of unreal. But they do invest heavily in its community grants program, and grant program allows community to build Chainlink integrations on key projects. They've done this with things like Solana, Avalanche, OKX, Brokerage, etc. So that is there. They're also has a very strong community, but the number of developers was actually quite small to me compared to other chains of this size. Next, let's look at tokenomics. I will spend a little bit of time on this because this is very, very important for you all as retail investors. Link token demand is kind of driven by how much it's used. So for example, a data requester pays oracles for fetching the data in Link, not dollars, in Link tokens. An oracle puts Link down as collateral to guarantee data and reliability and uptime. And these forces create a natural demand for Link token, which is so important. And Link has a fixed 1 billion total token supply, and Oracle operators have to acquire Link and lock it up as collateral to be an Oracle. And that puts a lot of deflationary pressure on the token. But one of the reasons I didn't like it so much in 2021 was because the inflation was very high. It was north of 30%, but that has been fixed. We'll talk more about that too in a minute. The initial sale terms, it was a crowd sale, was capped at $32 million. 35% went to node operators to incentivize the system. 35% was sold publicly, and 30% went to the company for continued development. And 65% of the initial supply was held by Treasury for node operators. Initially, way back when, as of 2021, 42.8% was circulating. I think I did this around mid-2021 last. And today it's 56%. So that's 31% inflation kind of since that last time period. But it slowed down to now about 7% per my calculations. Let's look at who holds the tokens. This is also very important for you to know. So nearly 91% is held by those with more than 10,000 Link. So if you are a retail investor, odds are you don't hold more than 10,000. That would cost, right now about $78,000 based on the most recent price today. But that's big. But if you look at the concentration, 19 wallets have between 10 million and 100 million Link. I broke it all out in a chart, and you can see the amount of addresses that have literally 0 to 1 Link are quite phenomenal. 1 to 10 Link, 10 to 100 Link. And 100 to 1000 Link, that is 9% of the total holders. And then the 91% holds more than 10,000 Link. So bear that in mind too over time, because this may not be a retail opportunity for you, because you never want all the big players, the big whales, to hold all the tokens. You like things to be evenly distributed. It's just a fact of life. Let's look at where Chainlink ranks on the IA Crypto Compendium. Of all the data management players, of which there are 29 in the top 500 cryptos, it is only ranked 5th. And that means it has some things that are far from perfect from a compendium perspective. Okay, not perfect. And there were 4 names above that. which actually are better structured programs. Now, let's talk about CCIP. This is probably one of the most exciting things as well. This has had me most excited as well, because the CCIP stands for Cross-Chain Interoperability. It sounds like CCCP, if anybody remembers that back in the day. Anyhow, it enables financial institutions to communicate bidirectionally with blockchains and move data, for example, tokens when everything gets tokenized, and commands across any public and private blockchain. That is the power of it. So I won't break it down in great detail, but if you want to dig into this graph, look at it here. A couple of things that are important is it'll support any web, fintech, or enterprise stack in a traditional financial services player. It does have that abstraction layer as well for both security and scalability. Then it talks to the blockchain networks, which encompass pretty much everything. They work again with Avalanche, Bitcoin, Ethereum, Solana, Phantom, you name it. All the players are there. And also down the bottom, you can see it also is geared to work with central bank digital currencies, which quite frankly, I'm not a fan of, but I just want to say, it's all about adoption for the token. If they do start turning on central bank digital currencies for spying and other factors, that could really drive a lot of token demand as well. So let's talk about the CCIP blockchain partners, just to cover them again, because they're so important. Literally, it's a who's who of every key layer 1, layer 2 out there, bar none, including a lot of the players that work. They've pivoted their blockchains to support central bank digital currencies. Again, in full disclosure, I'm not a big fan of that. Ecosystem, that's another who's who of players. They're partnered with Google Cloud and Swift, New York Stock Exchange, Visa, PayPal, Ethereum, Polkadot, Synthetics, Uniswap, MakerDAO, all the blockchains. MasterCard, Citibank, too many to mention, HSBC, Bloomberg. It is an extremely impressive link of partnerships that they have. No doubt about that. Now, talk about longevity and track record. Again, it started in 2014. It's been around a long time, which we like. Lots of points there. They did raise the $32 million in the ICO, which could bring about SEC scrutiny down the line. Who knows? Maybe Gary Gensler will be gone. It won't matter. They did launch their mainnet in 2019. And CCIP, in my opinion, the most important product, did launch in 2023, which has been big. That's why we spent a lot of time talking about it. For me, a lot of time is 60 seconds. I won't waste your time and you won't waste mine. But now we're going to dig into some financials that you probably never saw or heard of before. Because to value something, you need metrics to compare them to kind of the real world or the crypto world or whatever. But this is the number of transactions and typically you want to see transaction growth. But ever since September 2020, transactions have gone down. Okay, we went down from about 24,000 transactions to about 4,000 today. That's 80% shrinkage. What's also important, if you look at the market cap divided by the daily transactions, a metric that I like to look at to value tokens, it is valued at $1.026 million per transaction. So in order to fix that, you need to increase the amount of transactions in a very big way. But this trend scares me. So first thing. Next, let's look at the active users. Daily active address also showing shrinkage. Active addresses is down from 7.8% of the total addresses, 640,000 addresses. Maximus and Cat, hello there. That means only 2,560 daily active users. You take the market cap, you divide it by 2,560, you get $1.68 million per daily active user. Now, if that daily active user, one person, is like Google Corporation or Swift or central bank digital currency, that can change the game. But the trend here is not positive at all. Now let's look at the CCIP, because that has been very, very important to analyze. And here, since launch date in July, it took off and it was doing well for a while across some of the big chains. And all of a sudden, it's not doing much. And we're not sure why. But if you look at the CCIP revenue, in-link tokens, it's 50 Chainlink a day, or they're making $350 a day. And when you look at any decent chain, it has to be making at least $40,000 a day just to keep the lights on. But if you take that annualized, you get about, say, $91,000 divided by The market cap 4.61 billion. The answer is the amount of revenue based on market cap is 0.000019, which is very, very little. Now, if the Chainlink token went to $1,000, 50 times 1,000, then you get to where you need to be, $50,000 in revenue. So again, it is a function of the actual price of the token. So I'm just spelling it all out. I'm just talking at the current point in time and the amount of revenue today as of the activity today. The trends of those three things are going down, which I do not like to see. I like growth. S-curve growth. That's what this channel's all about. Next, let's look at growth opportunities, how to feed into those transactions and users. It is tied to the growth of smart contracts and blockchain services. So as blockchain grows, and we're coming out of a winter where it's been kind of lax, you expect to see a lot more activity here. And as more services are developed, they will increasingly rely on oracles for data feeds, like the Korean gaming partnership. Also, cross-chain opportunities. Chainlink has access to the Oracle network and across Polkadot, Solana, Binance Smart Chain, and so much more. And the tokenization of everything is also huge. So remember, this could be a big thing. It just needs that adoption first. Now, speaking of adoption, there are competition. Last time I did this, there was pretty much no competition out there. There was only one Oracle that mattered. Now there's a few. There's quite a few, actually. There's 12 or 11. Band Protocol, Bandchain, Telor, Dia, UMA, Super Oracles, Pith Network, Witnet, Enya, Switchboard, and Data Feeds Network. These are all competitors that never existed before. So you got now 12 players in total going after the Oracle market. And the one that will win is the same one that always wins. It's the best, cheapest, fastest, most secure will win. I haven't analyzed all these. It would take a while to do, but maybe in the future I can. Maybe we could identify a winner in the Oracle area and get in early and get in hard, because that's what we like to do. Anyway, let's look at some other risks too. Centralized token distribution with team and treasury controlling a good majority is not good. There could be a misalignment between token investors, nodes, and users. It's not perfectly structured, but they've gotten better at doing that, in fairness. Also, risks related to the toll bridge status can be susceptible to competition from non-token Oracle services. It could be based on data or a fee or a dollar or something else like that. And also, Zeus Capital believes it could ultimately be classified as a security by the SEC and its founders prosecuted. But we know the SEC is now toothless, thanks to all the other stuff that's happened with the precedent now from XRP and what that whole organization is trying to do. It's hard for them to prosecute anything. Now we're going to look at some charts and try to identify where we believe we could get to. So we have built a new product. It's not finished yet, but it's coming out soon. It's called the ATR product. And the vision of this was to identify if something is dead or alive. A lot of people cling to dreams and hopes. And the good news is, per the ATR model, Chainlink is not dead. However, the last bull run, we shot from $4 to $52, and then back to 16, and then back up a little bit, and then all the way down to like $4 or $5 during the bear. Now it's up around $7.80. But remember as well, it's important, we are coming up to layer 1, but the fact that it's up off the bottom and has a good zombie coefficient score, it's alive. That's great. So you don't have to worry about it being dead. It's not going to happen. But also you have to worry about this 31% more tokens than there were last time we hit the high. So that means if you look at the price today versus back then, you need a lot more buying pressure to take it back up to that level to match the price, because the market cap will be a lot higher. I hope people get that. Let's look at Link to ETH, because it is tied to smart contracts, and the 800-pound gorilla in the space is Chainlink. No, it's Ethereum, sorry. Getting my assets confused. But here, we had a while where the historic average of the Link ETH ratio was 0.02. Now it is 0.0047. So it's a long way off where it needs to be. And the question is, will demand pick up for the token? And if so, it could drive the price up a lot. But again, the zombie coefficient is very much alive, but it is also down 89% against Ethereum. So if you had a choice of holding a bag of Ethereum or Chainlink and you chose Chainlink versus Ethereum, you would have lost 90% of your asset as opposed to holding Ethereum. Very important as well to look at relative performance of assets. Okay. And I'm not here to ding anything. I'm here to share how things work in the real world. Now, let's look at a couple of other things. This is some pricing math here, just to break things down to simple terms. How high could it go? Okay, based on relative market caps. So for example, if Chainlink goes back to $20, it would mean it is 20% more valuable than Solana, which is a layer 1 that does more transactions than all the other layer 1s combined. Does that make sense? That's a question you have to ask yourself. If the price goes to $50 billion, it would have a $28 billion market cap. If the price goes to $100, it would have a $56 billion market cap. And the reason I share these numbers is because you see kind of thumbnails for Chainlink videos. It's like it's going to $900, it's going to $500, it's going to $400 and stuff. I just want to bring it down to simple terms. If price goes to 20, 50, 100, you get a feel for exactly what the market cap would be and how that compares to other assets as well. That's what we do here. So again, $50, $28 billion market cap. $100, $56 billion market cap, which is massive. And again, if you look at some of the stats I showed you, the daily active users and the trend, the daily transactions and the cost and the amount of market cap for each, it's kind of crazy. Now, if the crypto market cap does go to $10 trillion, okay, which is 10x from where it is now, it is possible that this will go up a lot, okay? And that's what's important to understand and realize. The question is it going to go to 10 trillion? So for example, if the crypto market cap goes to 10 trillion, I believe Bitcoin will be priced $250,000, and I don't see it going there this time around. Maybe in the future, of course in the future, but just not necessarily by 2025. But who knows? And that's what you need to bear in mind as well. So think of all that, balance it all out. Now, one other thing I do want to show you as well. This is the market rank of the top players down to Chainlink. You can see right now the fully diluted market cap is about $7.55 billion, which is big. But just to put things in perspective, if it does go to, say, $50 or $20, that would put it way up. So for example, let's take $50 for example. That would put Chainlink as the third most valuable crypto out there, okay, after Bitcoin and Ethereum. If that happens, again, a rising tide floats all boats. But I want to give you another example. That $7.5 billion market cap is the same as Robinhood. It's a trading operation, and it has basically the same fully diluted market cap as Chainlink today. But Robinhood does 1.6 billion in revenue, and that is 18,000 times more revenue than Chainlink, but it's valued the same. So this is what I want you all to think about. Now, I know crypto is different and it's special, but how special? 18,000 times more special? That's the question you have to answer yourself. So let's look at some price predictions from analysts, so-called analysts out there. We've got CP Forecast, Trading Beasts, Digital Coin, Government Capital, and Long Forecast. And they've got price predictions out to 2030. So the average range for end of year 2025 is 52. Remember, if that happens at the current point in time, that means Chainlink will be the third most valuable crypto. But of course, if we go to 10 trillion, everything will go up. So bear that in mind. So 52, possible? Yes. Remember the previous all-time high? Right there. It was there. Except there's 31% more tokens available now today. Now, other analysts have higher targets. You've got 2026, the average of them is 109, and then going out to 2030, up to $171. Remember as well, the dollar is debasing at 14% per year. So that's another big factor too. But even if it does go to that $171, that would be a market cap of $120 billion in 2030. Possible? Very possible. But think about the 11 other competitors too, and how many more competitors will be in this space. That's what you have to ask yourself. So do you want to get into an asset you can buy for like $8 now, maybe ride it to 50, or are there other places to invest? That's the question. So the conclusion in all of this, and sorry about all the numbers, but you need to know the numbers and the perspective. And I'm trying to bring in traditional world perspective. And I know crypto is different, but really it's not. At the end of the day, everything will be weighed the same, okay? And everything will be on the blockchain. So trad markets will become blockchain markets. Let's go to the conclusion, the good, the bad, the ugly here. So it is critical to the DeFi and smart contract space. It has the critical role of policing the whole area. It is the leader. It is the most trusted. It is the most reliable. It has a moat that it'll be hard to beat, but the competition is coming. No doubt about that, based on relative valuations, comparing 2 years ago to today. Tokenomics are still far from perfect. They rank number 5 in the Compendium, which is not good. Large token supply controlled by the team, not good. Competition, not good. The statistics around market cap over daily active users and market cap over daily transactions are very alarming to me. And Moonboy price predictions will not happen unless the crypto market cap goes to 10 trillion. And Link garners 1% of the crypto market cap, and it has huge adoption going forward. That's just the reality of the numbers. Now, one thing I do want to mention as well, crypto is absolutely irrational. I do not own Chainlink because of this analysis. I do believe there is a set of faster horses out there. Now, I'm not saying Chainlink will not go up. It will go up. It will go up in the bull market. How much it'll go up is the question. Could an $8 token go to 20 or 50? Yes, it can. But are there other tokens that can go from 20 to 200? Yes, they can. So that's kind of what we're looking for, is more multiples at this stage. All right. And again, a lot of goodness here with some things that kind of hold me back. And until I see a lot more adoption and a lot more fees, I will not be buying. So everybody, big thank you to everybody on Patreon who asked for this. Patreon is the one place where you need everything for your financial future. I used to call myself the Swiss Army knife in your back pocket, and that's what we are. So thank you to everybody there. Thank you to everybody on YouTube. And I hope this was helpful. And I hope sometimes people, you know, if they are all in on a certain asset and my response isn't entirely glowing, again, don't be offended, but adoption is required and a lot more fees are required, a lot more transactions. But the good news is they've got 5 special verticals where they can drop those nets and bring in those users. The question is, can they get them all? So with that, everybody, hope you like the content. Thank you all for being here. And wow, again, nearly 2,000 people watching live. So you guys were hungry for this. Thank you all. I'll see you tomorrow. Let me know in the comments below as well if I'm missing anything or if I'm too strict or too generous, or what you think as well. Thank you all. Bye.